Hello and welcome to the Business Standards Morning Show. I'm Kanishka Gupta and let's have a look at the stories for the day.
इस बार मनाली चलते हैं।
नहीं गोवा।
We Indians disagree on everything, but we agree. SBI is the banker to every Indian.
SBI से ट्रैक्टर लोन लिया, पाजी ये 100% सही किया।
SBI is the banker to every Indian.
The onset of a new financial year brought with it a slew of changes in the tax regime, and one of them seemingly dealt with a big blow to crypto trading in India. Now, income arising from the transfer of any virtual digital asset will invite a flat 30% tax. Another rule says that crypto losses cannot be set off against gains made from the transfer of another digital asset. So how will these new norms impact Indian crypto industry and investors? What's our next report to know more?
After a period of prolonged uncertainty, marked by the government and the RBI's skepticism towards virtual digital assets, a new tax regime for cryptocurrencies was finally unfurled in this year's budget, and it came into force with the onset of this financial year last week. The introduction of a separate taxation system was seen as a relief by the industry as it gave an air of legitimacy to cryptocurrencies, but it looks like it wasn't much of a relief. The new norms affected a flat 30% tax on profits made from the transfer of crypto assets and NFTs, irrespective of the holding period. The gains from virtual digital assets are being taxed in the same way as those made from gambling, lottery, or horse racing. No deduction except the cost of acquisition is allowed. Crypto gifts are also taxable at the slab rate if their value exceeds 50,000 rupees. And if that was not enough, a far harsher tax deducted at source at the rate of 1% for every trade will be levied from July 1st if the aggregate transaction value in the financial year crosses 50,000 rupees. The buyer must withhold the TDS on behalf of the seller. Experts warn that the TDS will suck out liquidity from the market by forcing high-frequency traders to curtail their trading. Some even warn that the government's decision not to permit offsetting of trading losses in digital assets may lead to an exodus of crypto companies from India. Meanwhile, Indian crypto exchanges have been witnessing higher volumes in the past week for multiple reasons. New investors are entering the crypto market as they view the tax as a tacit recognition of the asset class by the government. Some traders have booked profits to take advantage of the prevailing system, which, unlike the new framework, allowed set-off and carry forward of capital losses in crypto. While some investors are squaring off their positions to start the new year with a clean slate.
We kind of have seen some drop in users, especially during the 31st March. The selling has been more. A lot of traders have been trying to square off their positions. So yes, a slight impact is there, and we expect that it should pick up again in the coming few days. The industry continues to attract more users. From the day the taxations were announced in the budget session, since then it has been a phenomenal increase. The TDS slab is pretty high. This would definitely discourage day traders, people who are looking for arbitrage opportunities. It will impact the market making or the liquidity providers. This will kill the innovation, basically. A lot of things that have been mentioned in the bill. The definition of certain terms need to be clarified. We as an industry, we are working towards creating some very simplified products which can be integrated into the platform itself, so that people, when they are buying and selling the assets, they are able to track their P&Ls, deposit their TDS via the integrated systems. So we are trying to make this system as seamless as possible for the users.
In a way, the tax puts an end to the constant uncertainty that plagued the sector in India for half a decade now. The industry welcomed the move even as they bemoaned the prohibitive taxes, which threatens to accelerate the brain drain and discourage innovation. Experts have highlighted the impracticality of enforcing the TDS provision, especially on foreign exchanges and in the case of crypto-to-crypto trades, where there is no clarity on who will be designated as the buyer. Given the nature of the industry, which lives by the ethos of decentralization, enforcing TDS becomes arduous. As TDS will dry up liquidity on exchanges, investors will neither get the best prices nor quick execution of trades. This may also push traders to the grey market and devise ways to evade taxes. Individuals with resources, high-frequency traders, as well as startups and entrepreneurs in the cryptocurrency and Web 3.0 ecosystem are now being incentivized to shift their base to crypto-friendly jurisdictions like Singapore and Dubai in the UAE. India may see a brain drain of thousands of highly skilled developers.
Being the first of the financial year and crypto being in the news, our signups and volumes are definitely much higher. Some people are panicking. There are a lot of questions about TDS from the customers. There is still a lot of clarity that's awaited. For example, see what happens to the international exchanges that don't adhere to this, or what happens to the DEX. There are decentralized exchanges. TDS is the money that you are going to get back. Though 1% TDS is very high, in any markets, market making liquidity provision is a very significant thing. Problem here is that there is a significant part of the capital getting locked, and there are some questions that, like I said, we don't have answers, right? If they trade in a DEX, right? Who is responsible? How do they ensure that the other person deposits this particular TDS? And even in a DEX, you don't even know who is the counterparty. I hope government will see the rationality and they will reduce the TDS to something like 0.1% or 0.2% for a trader perspective. From an investor's perspective, TDS is not a deterrent at all. And then the second part is 30% tax. Some people are worried about that. The people who are really worried are also those people who trade heavily in crypto. I'm not seeing this that they will leave crypto because of this tax, because when we talk about crypto, the amount of returns that you are getting is pretty high. If government could see physically that a lot of brain drain is happening, people are setting up their offices or trades out of Dubai or Singapore, and we are losing out on tax revenue, some kind of rationality will prevail eventually. Of course, not 100% of the international exchanges will comply. Will government ban all these international exchanges? How will government find each and every international exchange and ban it? Right? It's very difficult to implement. A lot of people start trading in cash.
The tax has come as a body blow to an industry that was starting to thrive. Venture capital funding into Indian cryptocurrency and Web 3.0 startups grew 28 times to more than $500 million in 2021, according to a Bain & Co report. Indian crypto exchanges CoinSwitch Kuber and CoinDCX turned unicorns in quick succession last year. Polygon, a decentralized scaling platform for Ethereum blockchain, raised $450 million through a private sale of its native token Matic to venture capital firms in February. Polygon was founded in Bengaluru by 3 Indians as Matic Network in 2017. However, in order to de-risk its business from geography-specific regulatory concerns, Polygon has distributed its operations between several countries, keeping only a limited presence in India. Geotis co-founder Arjun Vijay says India will be forced to play catch-up a few years down the line if it lets go of an opportunity that's presenting itself now. With 3 months to go for the TDS provision to kick in, the industry is hoping the government will heed its warnings.
सब अच्छी दिख रही हैं यार, कौन सी खरीदूं? ये तो वही बात हुई, 4000 शेयर्स लिस्टेड है, कौन सा लूं? वो तो सबसे आसान है। तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा पर है 4000 स्टॉक्स की रिसर्च, टेक्निकल टूल्स और इन्वेस्टमेंट आइडियाज। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है, investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
After India's tough stance on cryptocurrencies, let us now move on to its diplomacy. Dignitaries from a host of countries are making a beeline for India. Russian Foreign Minister Sergei Lavrov, UK's Foreign Secretary Liz Truss, US Deputy National Security Advisor Dalip Singh, Mexico's Foreign Minister Marcelo Ebrard, and Netherlands' National Security Advisor Geoffrey Van Leeuwen were in New Delhi last week. What explains this sudden increase in diplomatic traffic, and what does India stand to gain from it? Our next report offers some insight.
We present a united front throughout NATO and in the Pacific. The Quad is, with the possible exception of India being somewhat shaky on some of this, but Japan has been extremely strong, so is Australia.
I believe that Indian foreign policy is characterized by independence and the concentration on real national legitimate interests. The same policy basis exists in the Russian Federation, and this makes us, as big countries, good friends and old partners, an important part of the international relations. We always respect each other's interests.
Clearly, leaders across the world have India on their minds. Last week, UK Foreign Secretary Liz Truss was in New Delhi at the same time as Russian Foreign Minister Sergei Lavrov. US Deputy National Security Advisor Dalip Singh was also visiting the national capital around the same time. March also saw Chinese Foreign Minister Wang Yi come to New Delhi. Before Truss, Lavrov and Singh, Japanese Prime Minister Fumio Kishida conducted his first visit to India as Prime Minister. In front of Prime Minister Narendra Modi, the Japanese Prime Minister called out Russia's invasion of Ukraine. He said that Moscow's actions had shaken the foundation of international order. Prime Minister Modi, however, did not mention Ukraine directly. And that points to what's going on with all these foreign diplomats visiting India at the same time. The tug of war is on between two major blocs. There's the US, along with its allies in the West and the Indo-Pacific on one side. On the other end are Russia and China. Russia's invasion of Ukraine and the sharp polarization that it has led to are the triggers, and India is the prize. So, what has put India in this position? Well, New Delhi has developed close ties with Washington in recent years. Along with the US, Japan, and Australia, India is a key member of the Quad grouping that seeks to counter an increasingly assertive China. However, India also has long-standing military and economic ties with Russia. All of this has put India in a unique position when it comes to Ukraine. India has called for a ceasefire and diplomatic solution to the ongoing crisis. It also refrained from backing a Russian resolution that sought to deflect the blame for the humanitarian crisis it has created in Ukraine. But that's not enough for the West, which has been pressing New Delhi to shift its position at the United Nations, where it has consistently abstained from resolutions criticizing Moscow for its actions. Then there is the fact that India continues to buy Russian crude oil, even as pressure mounts to isolate the Kremlin. Last week, Finance Minister Nirmala Sitharaman said India had already started buying discounted oil from Russia and had received 3 to 4 days worth of supply. Now that we have some sense of India's position, let's see what the various players involved want. For Russia, the goal is clear. Even if India is not on board with its invasion of Ukraine, Moscow will want New Delhi to continue its middle ground position on the war. And of course, Russia would want India to go on trading with it. But what else might the Russians and the Chinese want from India at a time when they stand isolated internationally?
For both China and Russia, as you know, China is going to be playing host to the BRICS summit in none too distant future. You also normally have something like the RIC summit, that is, the Russia, India, China summit, which takes place on the sidelines of the BRICS summit. Now, these are also very public events. So if it could be ensured that India does attend the BRICS summit, despite the problems at the India-China border, and is willing to also publicly sort of stand together with the leader of China and Russia on the sidelines of this summit. You look at the public projection that would mean that here are these three major powers who are standing together on the same platform, even if there are differences of opinion among them, say with respect to Ukraine, but not just with respect to Ukraine, with respect to several other issues, that could be of great public relations value to both China and Russia.
Now let's come to the US and the Western Bloc. There's something that bothers them more than India not publicly criticizing Russia. The US and Australia condemned India for considering a plan to make rupee-ruble denominated payments using an alternative to SWIFT. The plan involves making payments using Russia's messaging system SPFS. The US and its allies fear such arrangements would undermine the sanctions imposed by them. And in what could be considered a warning for India, the US has said that there will be consequences for countries that actively attempt to circumvent or backfill American sanctions against Russia. While India deals with the challenges arising from the Ukraine conflict, it should also look at the emerging opportunities.
It is in the era of great change and transformation of the international geopolitical landscape that opportunities also arise for emerging countries like India to expand their diplomatic space, to be able to play a larger role. And so if we are in a situation where, despite this crisis, there is an interest among major countries in the world to try and strengthen their partnership with India, and they are willing to, in a sense, make certain not concessions, I would say, but expand the areas of cooperation with India in order to persuade India to either lean this way or that way. I think that is a good position to be in. After all, this was the logic during the time when India was professing the non-aligned policy, because it was able to get support both from the East as well as from the West, partly, because India was a, vibrant democracy. India was seen as a country whose positions, whatever stance India adopted, also had a great influence on other developing countries. So from that point of view, if India is tending towards a modern version of non-alignment in some sense, it can't be the same, but in terms of really charting out a path for itself and seeking stronger partnerships with those with whom it shares convergences on various issues, I think it is good for India in terms of expanding its international profile.
Relations with Moscow are important because of the defense and strategic ties with India. India has also found strategic convergence with the US, other Quad countries, and some Western nations when it comes to Chinese aggression. Equally important is the fact that trade volume with Russia is small compared to how much India trades with the US and its allies. These trade ties, take for example, Japan's recently announced investments, are vital for India. The government will have to find a way to deftly balance these diverging interests.
क्या हाल? मत पूछ यार, फिर से स्टॉक्स में फंस गया। तो स्टॉक्स के साथ बॉन्ड्स, इंश्योरेंस, गोल्ड में बैलेंस कर। इसमें बहुत तामझाम है। तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा है ऑल इन वन अकाउंट। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है। Investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
India's neutral stand on Ukraine-Russia war has indeed ruffled a few feathers in the West. This war is taking a toll on stock markets too. Markets kicked off FY23 on a positive note, with benchmark indices Sensex and Nifty closing over 1% higher last Friday. But the double whammy of higher inflation and exit of easy money policy continues to endanger investors this fiscal year. Watch our next report to know if markets can withstand turbulent times, or is there a devil waiting in disguise?
Markets have staged a strong rebound after frontline indices Nifty 50 and S&P BSE Sensex hit bottom on March 7th, with benchmarks recovering 10% since March 7th. What has changed in the past 3 weeks? The Ukraine war, which led to dampening of investor sentiment, has still not reached a peaceful resolution. However, US President Joe Biden's largest ever release from the US Strategic Petroleum Reserve has calmed the oil markets from the multi-year highs. Lower crude prices coupled with Russia's offer of discounted crude oil prices at $35 a barrel to India are insulating the markets from the worst. Apart from that, analysts see in line fourth quarter earnings for FY22 help retreat investor sentiment.
Strategic release of crude oil from US, offer of discounted prices for supply of crude oil from Russia to India, and for the forthcoming Q4 numbers starting possibly second week of April. I think these are some of the, and of course lower crude oil prices than what they were about a week, 10 days back. I think this is what is adding to the sentiments. Expectation is that the Q4 earnings will be in line with expectation and hence you are seeing some amount of recovery. But to say clearly that we are out of the woods, I would not say so. There are concerns and only time will tell how these concerns are answered in terms of wisdom prevailing over missiles and bullets as far as the geopolitical situation is concerned.
Large part of the sell-off in India was driven by massive FII selling since October last year. However, analysts believe that the worst FII outflows have peaked for Indian markets. Neeraj Chhadawar of Axis Securities, for instance, expects FII inflows to resume in the next 2 months as valuations seem favorable. Listen in.
So our DIIs are much mature at this level, and the flows in the domestic mutual fund and from the retail side is very robust. Short term, the FII flow is likely to be volatile because it was historically seen in the 2015 rate hike cycle. Just before the rate hike, the volatility was very high in the market, and FII was selling not only India but from the emerging market basket. But in 2015 cycle, once the rate hike cycle started, then the phenomena of growth, the phenomena of fiscal deficit will come in, and the phenomena of fundamentals like earnings visibility will come in. We believe that for next 1 or 2 months, due to the rising geopolitical uncertainty, rising oil prices, inflation is a risk, and to combat that, the Fed has already come up with a trajectory for 2022. For up to some extent, that trajectory is clear. We believe that in next 1 or 2 months, FII flow will likely to moderate, which already started from last 1 week, and with more stability in the global market, volatility likely to reduce in second half, and then after the fundamental play will likely to kick in. We believe in the India story that is intact. Our Indian economy likely to be a fastest growing economy in the entire emerging market basket, and the fiscal deficit is already in a moderating phase. All these scenario will come in play, and earning expectation from the Indian market is remain intact. We expect 20% earning CAGR from FY24 from FY21. In the Nifty front, that aspect is remain intact. Short term, it could be volatile because there is a big macro risk is there. But we believe that in second half, they likely to come back, and based on the fundamentals which India hold.
To sum it up, panic among investors seems to be easing, but markets may not be completely out of the woods. The near to medium term sentiment will continue to remain volatile as the Ukraine-Russia crisis is yet to reach a definite solution, and supply shortage induced inflation is yet to peak. That said, this week's market trajectory will be guided by a host of domestic and global economic data points. India will release its manufacturing PMI data for March on April 4th and services PMI on April 6th. Globally, Eurozone, UK, USA and Russia will roll out their respective composite and services PMI data for March on April 5th. Moreover, Eurozone's retail sales for March are due to be released on April 7th, and Russia's Quarter 4th FY22 GDP data will be released on April 8th. Lastly, the Reserve Bank of India will announce its interest rate decision on April 8th. Shivam Bajaj of Avener Capital believes that the central bank will maintain the status quo and focus on growth at the upcoming Monetary Policy Committee meeting.
Central banks globally have embarked upon raising interest rates to curb inflationary pressures. India so far has maintained a more accommodative policy. Retail inflation in India in February 2022 rose to an 8-month high of 6.07%, which is outside the RBI's target range of 4 to 6%. In the last MPC, RBI attributed high inflation largely due to supply-side pressures. Tightening of monetary policy can assist in curbing demand, not augmenting supply. While the geopolitical tensions continue, the US has announced a massive release of the country's strategic oil reserves, and Russia has offered crude oil to India at a big discount. The RBI, in my opinion, is likely to keep its focus towards growth and maintain status quo.
अब क्या किया?
शेयर्स में ट्रेडिंग।
तुम्हें 5 पैसा नहीं पता?
ओए, अब तो सबको पता है। 5 पैसा पर मिलते हैं रिसर्च टूल्स, पोर्टफोलियो एनालिटिक्स और इन्वेस्टमेंट आइडियाज भी। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है Investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
After the war and its effects on stock markets, let us now move on to India's ambitious One Nation, One Test program for admission to central universities. The registration process for Common University Entrance Test 2022 kicked off Saturday. Our next report offers a peek into it.
The University Grants Commission has now decided to hold a mandatory Common University Entrance Test or CUET for undergraduate admissions to 45 of the 54 centrally funded universities from the upcoming academic year. This means that Class 12 board results will be superseded for determining university admission in favor of an all-India exam. The test will be conducted in 13 languages including Tamil, Telugu, Kannada, Malayalam, Bengali and Hindi by the National Testing Agency. To begin with, CUET will be conducted once this year, but the NTA will consider conducting the exam at least twice a year from the next session. The application window for the 2022-23 academic session will start from 2nd of April. To save students from appearing in multiple entrance examinations conducted on different dates, sometimes coinciding with each other, and to also provide equal opportunity to all students from different boards, UGC has invited all state universities, deemed to be universities, private universities and other higher educational institutions to adapt and use CUET scores from 2022-23 onwards for admission of students in their undergraduate programs. The CUET UG 2022 will be conducted in computer-based test mode. All questions in various testing areas will be benchmarked at the level of Class 12 according to the NTA. Students having studied the Class 12 board syllabus would be able to do well in the test, it added. If any university permits students of the previous years of Class 12 to take admission in the current year, such students will also be eligible to appear in CUET UG 2022. The questions in the test will be based on the NCERT syllabus, which is largely followed in CBSE schools, while 90% of students study in state boards. Experts believe that it may promote a CUET-centric coaching culture, causing students to focus on the entrance rather than Class 12 exams, although UGC chairman has assured otherwise. The UGC also said that a large number of central universities have also confirmed their participation in the CUET PG 2022.
इसको 30 डिग्रीज कर देते हैं। अरे नहीं यार, 45 डिग्री सही है।
We Indians disagree on everything, but we agree. SBI is the banker to every Indian.
SBI का वीडियो KYC सेविंग्स अकाउंट। Finally I agree.
SBI is the banker to every Indian.
Last year, cutoff for 10 courses in Delhi University colleges was 100%. That's all for today. We will be back with more news and analysis on our next episode. Stay tuned and thank you for watching. If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.